Hello traders, today is the 23rd of June 2011 and happy trading to you all. The time in London is 32 minutes past 8 p.m. In New York it's 32 minutes past 3 p.m. Exactly in 28 minutes New York will be closed. Now we are looking on the 3-minute chart of Google, okay, Google stock. For those of you who are new to us, we are the TSTW24 traders, and our website is www.stochastic-magdi.com. As I said to you before, at the heart of the matter of the trading triangle, we have the leaders and the news. These can change the direction of the market at any time, okay? Now, what's happening here is that the market gap down today, as I told you before in my previous video. I told you that we received a triple red signal on the third best time frame of TSTW24 yesterday for Google, and the price gap down today. As you can see, the bearish pressure, and the price gap down up to this level. We have, in my view, we have exceeded the daily average range. The daily average range is how much stock. There are some information coming on the screen. My apology for that. Okay, I'll remove that or minimize it. Okay. Now, as the daily average range is how much average a financial instrument can move per day. Okay, the daily average range for Google has been exceeded today. As you can see, a huge gap down from this level of 48700, call it 48700. The price went down all the way to this level. I put it here instead here in a zone of 47603, a huge drop. And now the price, as soon as the price hit this level, it just went into consolidation. Whenever you see the price consolidating, you know that a huge, the price has run for a while. It's like the price tired, the price pausing. That's why we say a pause period. Consolidation period is a kind of a pause period for the market or for the financial instrument itself. And so we see this kind of up and down in this section here, which are highlighted here. You see the importance of highlighting the range. So suddenly in this point in time at 7:30 p.m. London time, that's what I said to you, always when you're about to enter a trade, check the clock. What has happened around that time? This is the time that the professional will come back from lunch. We are talking about the American traders, the American professional traders. They went for lunch. They usually come back around 2:30. Okay, so we know that, and they came back, and suddenly the price started popping out of the consolidation zone. Some traders think that this is a continuation pattern because a downtrend, a consolidation, a price break below it. Some traders rush and start selling instead of retesting here, because the best way to sell after it break below it, you wait for a retest right here. It must not go back above it. If it goes back above it, you wait again, because it cancels the whole scenario. The professional will not sell again, so he must go down again and come back and retest it, which means coming back and touch it, not going above it, okay, and then followed by another bearish candle to the downside, trend line being broken, and then you take a signal there. But it didn't happen. In fact, what we had is that this tall bullish candle, because if you pay attention carefully here, the price was going slowly. You see the size of the candle here, very small candle, orderly in small size, because of the quiet period, lunchtime, the gap period. Okay, suddenly, pew, up. These are professional. They're taking profit here. They are out. A tall candle, you see. We do not need the tape to tell us. We do not need the tape to tell us what is going on. There was a huge volume here. Even though I do not have volume on my chart right now, I know there is a huge volume because the price does not have. And if you are willing to take the risk, then you enter that sort of trade. But if you don't want to take it, you don't have to take a contra trend. But because if you understand what's happening here, the daily average range has been attained. We have exceeded the daily average range, which means the price went down big time. You see a huge drop for the day to the downside. The bearish party is over. Those who were selling below the range here were just wasting their time. So the price dropped down. The professionals saw that. They knew that it was not right. They pushed it back up. Now they bring it to the edge of this consolidation zone for today. At least it's over. Now the price coming back here. What's the time now? As always, check the time. 20 minutes, okay, to 9 p.m. in London time. 20 minutes to 4 p.m. in Eastern time. In 20 minutes, the market will be closed. Those who were smart enough who bought it here took their profit here. The day is finished, okay? Unless another bullish candle follow here. But the 20 minutes, be very careful. Leave it for other traders because the day is finished, okay? So just a quick video regarding Google stock and a Contra trend. A Contra trend is a trend that you are taking in the opposite direction to the major trend. Looking at the as I did the video today, we explained to you that we are approaching another levels for Google, which is the median line of 2009. Okay, that level is if my recollection is good, is 45431. 45431. That's the next support level. If it failed there, it had to go to 43366, another critical price level for Google. But we believe, in my view, what I believe is not science. In my view, okay, in my view, I can be perfectly wrong. In my view, the median line of 2009 is excellent support for Google. Google may dip below it a bit, only to try to retest the low of this candle here. But in that zone, be careful, because the bearish pressure, you see, since this time, you see, just going down. We are approaching the median line of 2009 in a zone of 45431. And the critical price level below that median line is a 43360, something like that. Okay, now that's what we are talking about. So it's bearish on the 3-minute chart. I showed you before. Yesterday on the third best time frame, a triple red signal, boom, down, consolidation, the daily average trend. Pay attention to the daily average trend if you are trading financial instrument. Now for new traders, because some traders will email me, ask me question, because they are new traders, we have to be patient with them also, not to rush. Okay, I want to explain to new traders. If you know this already, do not worry. You see the candles, okay, daily candle, okay, the average size of the candle, that's what we call the daily, okay, true range. Okay, that's why we are talking about how much Google moves per day on average. Okay, so you can, there is another indicator to help you, but by observation you do your calculation and you can quickly know how much Google can move per day. Okay, so you use the high minus the low of the average candle and to know how much Google can move per day. So when we see a financial instrument, okay, like especially for those who are trading currencies, okay, we know that the Euro USD can move up to 240 pips per day, okay, maximum 240 pips per day. It can Euro USD can move that way. Okay, so when we see some days, Euro USD exceeded the 240 pips per day, we are not interested to buy anymore, even if it come near 200 pips. Okay, you don't want to be too enthusiastic to buy, okay, on a bullish day, a proper bullish day. So the professional are not interested. And also the algorithm for computers, the computerized trading system, will start selling, because if they see that a financial instrument went up the whole day, suppose the average trend is 200 pips, and they know that the financial instrument usually will reach 200 pips per day. If it goes for one particular day 300 pips, they are not going to buy that. They will instead sell. Traders will take profit. So you will see go down. Same thing when it's going down. If we exceeded the average trend, we don't want to sell it again. This is what we are talking about. So do not be, even though it's going down for the day, it's done. You have to come back another day. Okay, that's what we are talking about. So these people who were selling here, they were a bit courageous, aggressive traders. So they want to push it a bit too far. They are trying their chance. It didn't work. As you can see, other traders push them back in. These people, if they didn't take their profit, if they are not squeezing their stop loss, that's it, out. Okay, so these are smart traders. One way or another, they have to control it, because you can't trade Google if you don't know how to control the risk. Okay, so they know what they are doing. So I believe that they came out. Okay, so this one pushed them in, retest here. It's a buy signal here. Price turn around, returning back inside. So this was a low validation of this low. Price dip below, but return back above the previous low. Pay attention to that. Anytime the price return back above the previous low is a bullish signal, okay? But it's not me, it does not mean just buy, but know exactly what's happening, where you are, okay? The place and the time is important. So now again we are at the edge here. Now I want to check my clock again. It's exactly 45 minutes past 8, okay? Now in 50 minutes, London, no, not London, London is already closed, New York will be closed. Now I consider this green candle here a kind of a trap now, because a lot of traders will like to buy in the last 50 minutes. It can work though, but do you want to be the last person in the market, okay? Because I mean the day is almost finished, okay? Do you want to be the last person taking this trade? But I'll tell you something before I close this video. Some traders will take it because for the next day. So what's usually happening in the last 10 minutes before the market is closed, like you see yesterday, the price gap down. These are traders who come in last minute and place their trade because of what they see on the higher time frame and looking ahead for the next day, okay? So some of them will come in. If they want to buy, they will buy now for tomorrow and leave it on, okay? But I do not want to buy this financial instrument at this stage. There's a better place, which is 454, okay, 31, the median of 2009, which is somewhere here. A better place if it dip below that level and come near the low of the previous year in the zone of 433, okay, 66. That will be excellent place. But the stock is approaching slowly, okay? We are now at 47592. The stock is approaching slowly but surely the oversold zone, so watch out carefully, okay? I believe the movement to the downside for Google will continue, but not at a high speed, okay? It has to be, it's going to be like a slow up to it touch this zone. If it goes fast again, it will slow down when we come near the median line and the low of last year, okay? So this is just a quick video regarding a contra trend, a trade that you take in the opposite direction to the normal trend, a risky trade that is not very wise to take, but people do take it, but it's not recommendable to new traders. It has to be experienced traders knowing exactly what they are doing. So what you can remember is the average to range. Pay attention to the average to range or the financial instrument that you are taking, so that you can make excellent trading decision, okay? And also the market pattern, you see, it dropped down, now it consolidated here. If you fail to recognize that the financial instrument has exceeded the average to range, you will continue to sell. I won't sell because the time of the here was 7:27 London time, which is 2:27 Eastern time PM, okay? So it's not a suitable time to be selling this financial instrument around this time. So the clock, not only the technical, the clock also is important in trading decision, the time of the day, and paying attention to the 4 hours candle, what time the candle will close, the hourly candle, what time the candle is about to close, and paying attention to other traders and what is happening generally. So I hope you enjoyed this video regarding a contra trend, and that you will put into practice to avoid crazy trading, so to speak, okay? So thank you for watching, and speak to you very soon.